Welcome back to the watch list. Time to discuss everything NVIDIA. What do we need to know for this name? Because we saw the AI leader surpass the $3 trillion in market cap, take over, right? Some of the other biggies like Microsoft and Apple, but now the big pullback. Is there opportunity here? Let's bring in our panel. Jim Kelleher, Director of Research and Senior Technology Analyst at Argus Research, and Paul Marino, CRO at Granite Shares. Let's start with you, Paul. Some of your thoughts of what's going on here. When you see a pullback and you see NVIDIA under $120, do you say, I want to buy in?
If you're a believer in NVIDIA like we are, I think you buy the dips. AI is the future. The purest play out there is NVIDIA. When you think about their market share, they have their GPUs have 90% of data centers,
right.
80% of all AI chips, and that is going to grow substantially over the next 5 to 10 years as they build out all this AI technology. So from my perspective, any kind of pullback may be an opportunity to get in, and historically, anytime NVIDIA has had a stock split, the share price has gone down afterwards, so it's always proved to be a good investment long term.
Look, you know, Jim, when I look at that 10-for-1 stock split, people were getting very excited, and you know, I think they jumped in, and then you saw it go to 140, and then you have this pullback. Do you see opportunity here?
Yes. Hello, Nicole and Paul. I certainly do. When you think about how long NVIDIA has been on the rise, I mean, we have lots of portfolios where the cost basis in NVIDIA is. We even have some where it's below $1 per share, and none of our portfolios it's above more than 20 or 30 per share. And so many investors are, you know, playing with house money with their NVIDIA shares. They're not going to treat a 5 to 10%, or we're getting a 15% correction here, as an opportunity to run for the hills. They're going to be doubling down and adding to positions because pretty much everyone is in the green on this stock right now. So again, yes, they have. This is the second time they've split their shares in a short period of time, but it just has really created a broader pool of investors who can get in on this very exciting idea.
Yeah, and just to clarify, Jim, you do have a $150 price target, and you think that the growth goes beyond data centers and AI, other parts, gaming, professional visualization, automotive. All of these will be accelerating some of these catalysts?
Well, I think automotive is the one that's got the best opportunity. We've seen kind of a slow adoption of autonomous driving, and they really have a big bet on robo-taxis and autonomous. They have something like a $30 billion backlog in automotive. But let's face it, the real opportunity is in the data center. And I think what you've seen in the current earnings season is explosion in interest around names like Dell and Supermicro and Hewlett-Packard Enterprise, because these are the companies that are actually putting those GPUs into servers and now starting to get them out there. So, you know, we're talking about 100% revenue growth in the current fiscal 25 year, and then something a little slower, but still strong double digits next year. So it's still relatively early days to fill out these computers.
Yeah. NVDA is Granite Shares' 2-time long NVIDIA daily ETF, right? So you're making double. They have these in the short side for a lot of things, then you lose double. But you said it's pretty hard not to be bullish on NVIDIA in the long term. Is that right? What kind of action are you seeing?
We see people that are still very interested in NVDL. It's the largest 2 times leveraged single stock ETF in the world, and it continues to grow. We also have a 2 times short NVDA. It's called NVD, and you know it's dwarfed in comparison. So people are very much along this name. I agree with Jim. There's tons of opportunities, whether it be autonomous driving, data centers, gaming, cryptocurrency, and those GPUs that NVIDIA makes are the key component to all of that. So we just see a long runway.
We think about, you use the word in your notes, hyperbolic. People get so excited, they like to see things skyrocketing. What do they need to know, those folks?
Well, trees don't grow to the sky, right? So they reach a limit and then they correct and then they come back. Healthy pullbacks are great for the market. And again, they offer opportunities for people to get in that may have been leery seeing this thing go straight up. So I think it's healthy.
You have a buy,
Yeah.
Jim, on this name. I mean, when you look at the group and the competitive landscape, do you have buys on some of the other names too?
Yeah, we're positive on Broadcom, on Supermicro, on Dell, and our most recent upgrade is Hewlett Packard Enterprise. I will point out the risk. One risk could be, you pointed to those 4 names with the market caps in the 3 trillion range, and 2 of them, Apple too, they're persistent targets for regulation and anti-competitive, monopolistic. NVIDIA does have an actual tremendous competitive moat with its CUDA software, which goes hand in hand with their GPUs. And you could see some regulatory scrutiny saying that they're kind of dominating the market and cutting out other players between their GPUs and the CUDA software. So I'd say regulatory is a little bit of a risk here, something to keep in mind on. And for that, I attribute Tiernan Ray, the excellent writer of the technology newsletter, to point that out to me. But generally, I think there's a lot of growth ahead, and patient investors who are willing to ride out these bumps will be rewarded.
Right. And look, there was an article about, the turn in Nvidia, and that has spawned some inevitable comparisons to the likes of Cisco and Intel in early 2000. Is Nvidia doomed like that or no? Paul,
well, I think we're at a different place in the technological revolution. I can't imagine that every single large cap company in the United States has been as successful as they has it wrong. I mean, either somebody's playing a big joke, maybe the robots are playing a big joke on us and AI isn't real, they're just trying to, fool us, but I think it's the real deal. I think there's many, many more years to come to build out, AI, and Nvidia is the key player there, so.
Right. At that time, Cisco briefly surpassed Microsoft, become the largest U.S. company by market cap in March of 2000. It's good to see you both. Thank you so much. Jim Kelleher of Argus and Paul Marino at Granite Shares. Thank you both very much. Good to see you.